Q3FY22 earnings conference call of Meghmani Finechem Limited, hosted by Go India Advisors LLP. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Surabhi Sutaria from Go India LLP. Thank you, and over to you, ma'am.
Thank you, Jacob. Good evening, everybody, and welcome to Meghmani Finechem Limited earnings call to discuss the Q3FY22 results. We have on the call Mr. Maulik Patel, Chairman and MD, Mr. Kaushal Sapalkar, Managing Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. Ravi B, Strategy Consultant, and Mr. Milind Koteka, Investor Relations Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Maulik Patel to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Surabhi. Good evening, everybody, and welcome to the call to discuss MFL's Q3 performance. I hope that you and your loved ones are keeping safe in this difficult time. I trust you had the opportunity to run through the earning presentation, which was shared earlier today. We are glad to report a good performance for the third quarter for FY22. The ongoing energy crisis, supply chain disruptions, and geopolitical issues has made it a volatile quarter. We have achieved highest ever 9-month top line of rupees 1,052 crores. The overall optimal utilization of the plant, additional capacity of H2O2 and caustic soda, and higher sales realizations drove our revenue and profit growth. The investments undertaken in the last couple of years for diversification of the products continue to drive growth and increase our competitiveness. Our new expansion projects are on track for completion as per the schedule provided. Supply chain disruptions and inflationary pressures on raw material prices made the business environment quite challenging. Even though we have adequate supply of the raw materials to ensure continuity of operations, there is uncertainty in the market about the input cost. Despite this, we are confident that our EBITDA margin would be sustained in the range of 28 ±2% on account of focus on improving efficiency, additional of value-added derivative products in our basket, strengthening our fully integrated complex. Our absolute EBITDA will grow along with growth in the top line on account of robust demand expected for all our existing products and our entry into the new products like epichlorohydrin and chlorinated PVC, which will ultimately boost our ROCE. Further in line for continuation growth, we have announced our expansion in chlorotoluene and its value chain and setting up R&D facility which will be funded through internal accrual. This will help to further strengthen our fully integrated complex. We continue to move forward in our strategic direction for expanding scale, strengthening integration, and achieving lowest cost of operations. Now I will hand over the call to Mr. Sanjay Jain, our CFO, who will walk you through the financials. Sanjay, over to you.
Thank you, Maulik. To begin with, for 9-month FY22, the overall plant capacity utilization is 86%, which improved by 8% year-on-year basis. For 9 months 22, with capacity utilization of 76%, the production of hydrogen peroxide has ramped up by 190% year-on-year basis. In caustic soda, the ECU realization has increased by 145%, and sales realization for chloromethane increased by 106% year-on-year basis. With respect to Q3 witnessed a revenue growth of 91% to rupees 422 crore on year-on-year basis. This is on account of revenue up in chlor-alkali by 104% and revenue up in derivative by 59%. For Q3 FY22, the EBITDA in absolute term has improved by 107% year-on-year basis. EBITDA margin stand at 33.5% as compared to 30.9% in the same quarter last year. This is despite of having a high inflationary pressure on the raw material prices. Our PAT is up by 184% at rupees 70 crore. PAT margin increased by 540 basis for Q3 FY22. With regard to 9-month financials, on a 9-month basis, the revenue from operations grew by 85% to rupees 1,052 crore, backed by higher volume across both the segment and better realizations. EBITDA grew by 85% to rupees 334 crore, and PAT grew by 126% to rupees 154 crore. For 9 months 22, ROC has improved to 26% from 16% in FY21. This is mainly on account of higher profitability backed by contribution from additional volume of caustic soda and hydrogen peroxide, better utilization and improved realizations. The net long-term debt has increased by rupees 221 crore over a period of 9 months, as company has borrowed additional term loan of rupees 311 crore and at the same time made a repayment of rupees 90 crore. Debt to EBITDA has remained at 2.2x in 9 months compared to 2.1x in FY21. The company has maintained debt to EBITDA ratio even after borrowing of additional loans for expansion project. This is mainly on account of absolute growth in the EBITDA. All our expansion projects are well on track. We expect to be commissioned as per schedule. The company has incurred cash outflow of 365 crore in a period of 9 months for 3 projects. Lastly, the credit rating of the company has been upgraded from A+ positive outlook to AA- stable outlook by the rating agency CRISIL. With this, we can now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, Malik bhai. How are you?
Hello. Good. All good, Rahul.
Sir, just a quick question. First of all, congratulations for the wonderful numbers. Now, sir, in terms of January, we saw this Indonesian coal that has been banned, and suddenly because of that, even the South African coal, the prices shot up from $112 to $150. So, are we seeing any incremental pressures compared to the last quarter in terms of raw material inflation?
Yeah, Rahul. The coal price has started increasing from September mid.
Right.
So definitely, all the companies who are having an inventory, they will not get affected in the Q2, end of Q2. So everything started getting pressure from the, almost kind of, you can say that October end, we will get a pressure of coal price increased. Because everybody keeps some inventory of the coal. So that is the main reason why you can see the maximum impact of the coal prices is coming in the Q3.
Right, but as of January, I mean the first 20 days that we saw of January, I see incremental vis-a-vis the October, November, December period, the raw material inflation?
No, in the coal prices, it has softened from the Q3, the peak coal prices in the month of beginning of January, or you can say the end of December. But actually, again, mid of January, there was a rumor that the export ban from Indonesia, so it has slightly up little bit. But
okay.
Now again it is released that pressures and export has started again from the Indonesia. So we will not see the same kind of pressure what we have in Q3 on the input cost of coal price.
Okay, got it, sir. Fair point. This is helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Nilesh Guge with HDFC Securities. Please go ahead.
Thanks for giving me the opportunity, sir. Sir, first of all, congratulations for a good set of numbers. Sir, my question is just on the revenue side. See, if I look at YOY in this third quarter of FY22, there is more than 90% up in revenue. So, can you just give us the detail about out of this 90% plus growth, how much is through volume growth?
Okay. Thank you, Nilesh, for this question. The revenue breakup for 9-month period is it is up by 85% year-on basis. This is backed by 80% growth in the chlor-alkali and about 97% growth in the derivative side, which comprises of hydrogen peroxide and chloromethane.
Okay. No, sir, I'm just asking, overall, see, you are right, 9 months, I can see 85% growth. But I'm asking, out of this 85, if I broadly split the volume growth and a value growth, so how much could be attributed to volume growth?
Yeah, Mr. Nilesh, if you look at the 85% growth, we can say the number is 40% is coming from the volume growth and about 60% is coming from the realization, which is improved in Q3 compared to Q3 of 9 months compared to 9 months of last year.
Okay. Thanks a lot, sir. Thanks, sir. Thanks.
Nilesh, just wanted to add one point here. We have commissioned because we started our expansion of caustic soda and the hydrogen peroxide, which we have commercialized in the second quarter and third quarter of last financial year. So that was just the beginning of commercialization. So we have not added the volume. So all the volume we are getting it right now, it is because the result where we started our expansion of 3 years back.
Okay.
So that is the result of all past 3 years expansion, which was commissioned in last financial year. That result we are getting in current financials and quarters.
Okay. And so just one last question on this EBITDA margins. We are able to get the about 30 plus EBITDA margins in last 9 months FY22. So any guidance on that side? Will it improve or you are able to maintain, give the guidance of 30-32 only? Shall it improve further from this level as well?
Yes, Nilesh. From the beginning, if you see the company's performance was steady in terms of our EBITDA margin is steady around 28 to plus or minus 2%. And going forward, also we are expecting we will remain same, irrespective of any industry will be down or up. Because our model is we are de-risking by adding value-added products. So some industry or some product is down, we can able to compensate in the other industry in other business segment. So that's how we have decided to go for a fully integrated, and down the line in 3 to 4 years time, our ambition is to consume everything chlorine and hydrogen. Most of the products we would like to consume by pipeline customers or internally by ourselves. That is our long-term vision.
Ultimately, what will happen over here is that even the way we are growing, the absolute EBITDA that the company is having, that is something which will increase over a period of time, and that will ultimately boost our ROC. So which was around 16% as on FY21, which is right now 26% as on 9 month FY22. So we are expecting that ROC will be around or even higher than 24% post FY24.
Okay. Thanks for the answers and all the best, sir.
Thank you.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from the line of Nirav from Anvil Research. Please go ahead.
Good afternoon, sir.
Good afternoon. Yeah.
Sir, my question is in your presentation you have break up the revenue between derivatives as well as chloralkali. 72% is from caustic chlorine and 28% is from value-added products. So if you can break down the EBITDA, 334 crores is the EBITDA what we have generated for this 9 months. So if you can similarly break down the EBITDA between the value-added products and caustic chlorine.
Nirav, Milind here. So basically right now we are not actually giving product to product bifurcation in terms of the value wise, but in volume wise one can definitely get from the product capacity utilization.
Yeah, which you have shared in the presentation.
Yes.
Okay. Sir, second question is if we see sequentially our caustic production is slightly lower. So was this because with the increase in the caustic prices, chlorine was getting a problem and we decided to lesser down the production of caustic, or have we some shutdowns in this quarter because of which our volumes were lower?
Yeah. So if you see the 9 month production, we are higher than the last year 9 months. But definitely as a quarter 3, if you see, is little lower, if you can see compared to our capacity, because of we have taken a 10 days complete shutdown of the entire complex, because all the epichlorohydrin, chlorinated CPVC and the future caustic soda expansion and the captive power plant, what we are doing it right now, it requires the flexible, to make it flexible, we need to take this shutdown to interconnect all the pipelines and remaining things for the future benefit. So that's why we have taken a 10 days complete shutdown in the time of Diwali, where there is a lot of pressure in terms of the marketing because of the festival season. So yes, by looking at a future requirement, we have taken a shutdown of in the Diwali time for 10 days. That's why you can see the little lower production compared to the last financial year.
And in fact, if we would have not taken that, then I guess these numbers would have been even higher.
Slightly higher, yeah, absolutely. Because I think our quarterly run rate should be around 70,000 tons, and what we have done is like 58,000 tons for this quarter.
Exactly.
Yeah. Sir, my last question would be on the captive power plant. So I think our current capacity is like 294,000 tons, and with a captive power plant of 96 megawatts. So are we fully captive in terms of our caustic soda requirement, or do we need to buy power from the outside also in order to suffice our requirements?
Nirav, whatever we have done an expansion from the beginning, while we started in 2009 or 2013-14, we have debottlenecked our plant, or in 2017 we again expanded our capacity of caustic soda, or currently what we are expanding to make it 294 KTA to 400 KTA. All expansion of caustic soda when we have planned along with a captive power plant only.
Okay.
So we are not dependent on the GEB as of now. Yeah.
Okay. And sir, if you can tell us, like in between the quarters, so let's say from Q2 to Q3, since we are buying imported coal, so how much has been the cost increase in terms of per unit generation cost for us? So let's say for last quarter, if we benchmark in terms of on a scale of 100, how much is the cost increase so far as coal is concerned? One, and second, similarly for salt also, how much has been the cost increase what we have seen in between the quarters for power as well as salt?
Dinesh, if you look at the coal prices, as you know that it is increase in quarter to quarter, year-on-year basis. If you look at the coal prices, that is almost up by in the range of 163%.
Yeah.
Q-on-Q basis. And on Q-on-Q basis, that is compared to last quarter versus this quarter, that is Q2 versus this thing, it is almost up by 45%.
Okay.
And with respect to salt prices, it is also increased compared to last quarter. It is up by 17%, and on Q and YOY basis, it is up by 62%.
Okay, sir. Thank you for answering the questions in detail. I'll join back in the queue if I have any.
Yeah, sure. Thank you.
Thank you. Ladies and gentlemen, you may enter *1 to ask a question. The next question is from the line of Manish Jain with Moneylife Advisory Services. Please go ahead.
Thanks for the opportunity, and congratulations on good set of numbers. One of my question is that one of our competitors is also setting up ECH capacity of around 50,000 tons per annum. So what impact do you foresee it will have on the demand supply situation going forward?
Yeah. Manish, it's a good question. I think you must have noticed we have given a project schedule when we are going to commission our ECH, CPVC and caustic soda expansion. The ECH we are planning to commission by first quarter of next financial year. And the many people, as our peer has announced a capacity, and I think it will take time because they just announced normally the chemical project which will take 2 years time to setting up a project. But at the same time, if I say the demand side, there is enough demand is growing right now because the government focus and the worldwide, the epichlorohydrin is in short supply. because everybody is focused on the infrastructure and the government spending to revive the economy from the COVID situation. Majority of the government in the worldwide, they are spending on the infrastructure. So there is enough demand worldwide, including India. So I don't see any problem in the coming time, even though the capacity expansion of the epichlorohydrin will happen in India.
Just to add to that, to give just bit numbers in terms of the demand, if we see in ECH, epichlorohydrin, the demand as on current basis, it will be somewhere around 82,000 tons per annum. So by the time we commission our plant, we expect this to be around 85 or 87,000 tons per annum. And by the time the year comes up, this would be crossing even 110,000 tons per annum. So the way the demand is growing for the ECH, any new capacity that will be coming up will be easily absorbed. Plus, over and above this, there are new facilities of the epoxy resin, basically where majority of the ECH goes, is going to set up in India. So that's where we see a good amount of jump in the demand for that. And also over a period of 5 years, we expect the demand for this to grow by around 15 to 17% CAGR.
Okay. Secondly, for chlorotoluene, so are you building the technology in-house or you will be licensing it through some other company?
So it's a mix. We have a mix approach. The beginning part of the chlorotoluene chain, we are getting it. What we are planning to do it in a first phase, that we are getting a technology from ready-made technology where there are running products, and probably future downstream product of the chlorotoluene where we are going to develop the products in-house in the R&D. So in the first phase, what we have announced, it is going to develop. We are going to use the ready-made technology which is available in the world. Yeah.
Okay. Thank you. That's it from myself. Thank you.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from the line of Amit Karawat with Global Financial Services. Please go ahead. Mr. Amit, your line is unmuted. Please go ahead with your question. Mr. Amit, may we request you to unmute yourself if muted from the handset? There is no response. The next question is from the line of Rohit Sinha with Sunidhi Securities. Please go ahead.
Yeah, hi. Am I audible?
Yeah.
Thank you for taking my question, and congratulations for good set of numbers. So just a few things. I mean, first of all, on the caustic side, just wanted to know your perspective for the future demand and prices, because we have seen a significant jump in last 4 or 5 months in terms of prices. So where we see these prices going to be settled down, considering all that, China is also looking to come back with better capacity by, I think, April or May. And again, since coal prices are still on the higher side, so definitely, what sort of outlook you guys see in this caustic soda prices?
Thanks, Rohit. So just to answer your question, the caustic demand is majorly currently is driven by the international prices. You must have seen in last 1 year, all the alumina manufacturing capacity is running on full-fledged because of the infrastructure demand which is coming in the worldwide because of the COVID situation and the government spending. The same thing is happening in India also. And over and above, the Indian government company has decided that they will not procure any caustic soda from the abroad. They will, because to support the domestic manufacturing, they will encourage the domestic manufacturer to supply to the government companies. So these two international prices as well as the domestic support from the government we are expecting the next 1 year situation, it will remain very robust in terms of the caustic soda prices. At the same time, coal prices also gone up, but because of the high demand, because of the infrastructure, it is easily absorbed and we are able to pass on to the customers. So that is the advantage we have, and we see that it will remain robust in next 2-3 quarters as the infrastructure demand is going up and the government focus on the infrastructure projects.
Okay. Thank you. So, apart from this infra side, where basically demand you guys are seeing coming for caustic soda apart from this infra side?
See, alumina is the major consumption driven for the worldwide. Caustic soda is up. The reason behind is alumina. Because alumina, when you produce aluminum, you need a huge amount of caustic for the purification. So that is the one application. And second thing, you must have seen China Plus One strategy, where the specialty chemicals, and because of the PLI scheme, government is spending on the pharmaceutical new molecules, all chemical manufacturing, on specialty chemical manufacturing company. They are getting huge advantage right now, and they are coming with many molecules in coming times. So this will increase the demand of the caustic soda, because caustic soda consumes in every chemical industry. So we feel that in coming times, I think the more and more demand will pick up in India as well. Even though 1 or 2 plants of caustic soda will come, it will easily absorb in 1 year time. The way we are growing and the way infrastructure focus on the government side.
Okay, sir. And secondly, on the new capacities which are coming in, so just wanted to know, I mean, post commissioning these projects, what should be the optimal time for reaching up to the optimum utilization or peak utilization level?
For the caustic soda, definitely we are experienced and we are doing it since many years. So I don't think so it is taking much more time for us. As far as we have announced that if we are able to definitely we are able to commission the entire project by Q1. We will reach to optimum capacity by Q1 end.
Okay. And for the other segments, or even for chlorotoluene things which we are...
Chlorotoluene, just we started on the paper. There is no capex we have started. So capex maybe we will start probably by end of Q1 only. As all our epichlorohydrin, the CPVC and the caustic soda will be commissioned successfully, probably time we are going to start the capex from the chlorotoluene side. As of now, the chlorotoluene is working. We are working in terms of the engineering on the paper only.
Okay. And by the end of this current capex announced, where we should be looking at our debt side or cash position?
Rohit, with respect to the borrowing for the ongoing expansion project, company has borrowed 221 crore over a period of 9 months, and at the same time made a repayment of 90 crore towards the repayment schedule. So debt which was of 463 crore in FY21, that has increased to 683 crore as of now. And with respect to expansion project, we have incurred almost 365 crore in the period of 9 months, and as on date, compared to the last year results 9 months, the total expenditure was made is about 500 crore for the ongoing expansion out of 700 crore. And we expect that in Q4 we may incur down over 80 to 100 crore another amount to be incurred in Q4.
Okay.
Yeah. Rohit, I hope we answered your question.
Yeah, sir. Yeah.
Okay.
Thank you. That's all from me, sir.
Thank you. The next question is from the line of Abhay Malhotra with Sanmati Consultant Private Limited. Please go ahead.
Hello.
Yeah.
Hello. Maulik bhai.
Yes.
Am I audible?
Yes. We can hear you very clearly.
Congratulations. Very good set of numbers.
Thank you.
And I have 2-3 questions. Number one, regarding expansion plan, is he at 90% complete? When it will commence the production?
Sir, as we have mentioned, it will be commissioned by Q1 next financial year.
Okay. CPVC 80% complete and the caustic soda 80% complete. When it will commence?
Yeah. So we are expecting as on today, the end of Q1, we will commission both the projects.
All the three projects by the end of the quarter it will be commissioned.
Yeah.
Am I right?
Yes.
Okay. Number two, your sales on this Q3. I am talking of sales in Q3 compared to Q3 of the last year. Okay.
Yes.
The sales have doubled.
Yes.
But whereas sales have doubled and all the product prices are very high during this current quarter.
Right.
Whereas your EBITDA margin have gone up only by 2.5 basis. It was 30.90. Now it is 33.50. Why so?
So if you see, sir, our actual EBITDA percentage has increased from 30.19 to 33.5.
Yes.
EBITDA has almost more than doubled, 107%. So
No. Amount wise, I am talking percentage wise. Amount your sales has doubled, so amount will naturally double. I am talking that I was expecting your percentage of EBITDA margin this quarter. In view of the peaking the price, caustic soda prices, it should have been not less than at least 35-36%.
No, Lodaji, there is one more thing, because at the same time we are able to pass on the benefit of increase of the raw material. So it is not only the finished goods prices increase, but at the same time as our CFO has mentioned in the earlier question, that the salt price, methanol price, and the coal price has also gone up at the same time.
Okay. Fine. Then another question: how much amount we have spent 300 something crore in all the three projects? 365 crore. Okay.
Yeah. Yes.
How much additional amount we will require to be spent for completion of all the three projects?
Almost 150 crore.
So
150 crore.
yeah.
So total means I can say there is a 525 crore, 520 crore. All the project cost will be there for all the three projects.
The 500 we already incurred till December 21, along with the previous year expenditure of 135 crore, and we are informing you right now it's about 150 crore be required to commission all these projects, all three projects.
Yeah, but somewhere I have read in your presentation, Sanjay, somewhere I have read in your presentation 365 crore you have spent on the project.
365 for the 9-month period, and another 135 we have already incurred till March 21. It is there in the presentation. So total is about 500.
March 21 had gone. We are talking about March 22.
No, sir, just to give you the answer.
You have to go through the entire project cost. The project cost, part of it was spent last year, and balance has been spent in the 9 months, and about...
I see. These 365 or 9 months.
Yes.
And 150 you spent last year, so already we closed the 500 crore.
Yes.
Yeah, okay.
Additional 150 crore will be 150 crore will be required to complete all the three projects.
That's right.
Okay. Now the last and the least question, my last question. Since our projects are being completed in first quarter or the end of the first quarter, so most of the projects except the new project we have announced, which will be taken for execution in the first quarter of the at the end of the first quarter. All right? Am I right? So can we expect to exercise the option for redemption of the preference shares in view of the strong cash flow?
Yeah, sir, that is already at the discussion level, and we will take an appropriate discussion at the board level, and we'll take steps accordingly.
Thank you very much. Thank you very much. Once again, congratulations to entire team.
Thank you.
And management for excellent performance. Keep it up. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Dr. Amit Vora with the homeopathic clinic. Please go ahead.
Yeah. Am I audible?
Yes.
Yeah. Good afternoon, Mr. Malik.
Good afternoon.
Good afternoon, everyone else there. Most of my questions have been already answered. There's just one small question. How much full year guidance would you give for this year, and any full year guidance for next year due to all this price rise and all?
Yeah. As I think you can see that in our presentation for the next financial year, I think we will be, we are thinking to, we are expecting to close around 1,450 crore by end of this financial year.
Okay.
And next financial year, if the situation and the raw material prices and all the three projects which we are commissioning, it will be on time commissioning, then definitely we will cross more than 2,000 crore by next financial year.
So, can I speak?
Yeah.
Yeah. So, if I'm not wrong, 2,000 crore for FY23, which was initially projected for FY24.
That's right.
So, we can expect that.
Yes.
Oh, okay. There is one more suggestion, or I don't know, but if since we are having good profit this year, probably next year also, are you planning any time earlier by 23 or 24 to reduce on debts?
So on a debt part, if you can see, FY22 will be a year where we'll be having the maximum debt. But on FY23 onwards, once the ECH and the CPVC and the additional capacity of caustic soda will start contributing, our absolute debt EBITDA will be increasing, and we will be able to pay off our debt. So from FY23 onwards, our debt will start going down. As it is every year, we are paying off around 130 to 140 CR as a repayment of debt. So FY23 onwards, debt will start going down.
Okay. Last suggestion, just 1 minute. I know I'm not the right person to say this, but if we can, save by not paying dividends and that amount for the growth of company, I think it might help us better. This is my individual idea. I don't know, because a lot of investors might expect a dividend also. But my individual idea is that if we save on paying dividends to the investors and use that amount for growth, it will help us grow faster.
Thank you for your feedback. Definitely that will be considered, and management will take appropriate decision in terms of growth and in terms of rewarding shareholders.
Thank you so much.
I would like to add here, Dr. Vora, that see all these statements which we have spoken about, how the trend is, those numbers what we spoke for this year or what we are speaking for the next year are all based on the current situation in the market and the current developments in prices and raw material costs and all that.
I understand.
Goes ahead, these things can change for the better or for the worse. We cannot say at this point in time, but I think we should be taking that as a current situation and not necessarily the definite situation. That's all I wanted to add.
I got that. Thank you so much.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from the line of Chintan Chheda with Quest Investment Advisors Private Limited. Please go ahead.
Yeah, hi. Good evening, sir. And thanks for the opportunity.
Yeah.
Thank you.
Yeah, and congrats for excellent set of results, sir. Sir, my first question is related to caustic soda. So, you've really highlighted the demand factors which are driving the prices of this industry. Okay. But I also want to understand, are there any supply side factors which is, protecting your margins at the same time? Because normally this doesn't happen in a commodity industry wherein your input costs are increasing so fast, and at the same time your prices are also increasing at the same rate. So your comments on the supply side factors?
Yes, Mr. Chintan, as caustic soda industries, mostly it is driven by, it has a diversified many applications. So definitely it is not depend on one particular application, but when the raw material price is going up, immediately we are able to pass on the benefit to the customers in terms of the price, not benefit, but the price increase. The only reason is the current demand supply situation is like that. So international level, not only in the domestic level. So when the international level, the domestic demand is international and the domestic demand is on the higher side, definitely in any product you are able to pass on to the customers immediately as the raw material price is going up. So that is the scenario which we are passing through in last 1 year, and we are expecting this infrastructure, and the chemical demand will continue for next 1 year. Also, we are expecting in the same space.
Okay. So any sense on what could be the capacity utilization of the industry in India or as well as globally?
I think it is roughly, you can say, in the majority of the chloroalkali industries is running at 85% around capacity throughout the world. Except China. China is little less, but except other than China, I think it is more or less it's 85%.
Okay, and in India?
India is also the average, you can see it's 85%,
Okay. And what could be the peak capacity at which these plants can run?
See, overall, if you see, normally the people are taking a shutdown of their captive power plant. Depends. So normally once in a year they take a shutdown. So in a quarter on quarter, definitely it may vary 4-5%. But normally in a year average level, I think it is 85%. You can consider.
So you mean to say this could be the peak capacity? Like
on an average, it will be around 85%. But as Maulik said, in any quarter it can be 88 or 90 also. But people have to take a kind of a maintenance shutdown. So on an average, it reaches around 85%.
Hello.
The line for the current participant is disconnected.
Okay.
We move to the next question. The next question is from the line of Nakshita Mehta from Credent Asset Management. Please go ahead.
Hello. Hi.
Yeah.
First of all, congratulations on your beautiful set of numbers. And I have a few questions on the revenue breakup in export and domestic market. As you just mentioned that even internationally you had a support. So what is the revenue breakup in export and domestic?
Yeah, Nakshita, for the last quarter, I think you can say that, most of the products we have sold only in the domestic. So there is no export demand. So normally the export, when we are planning to do it only and only when we are not getting a good realization in the domestic market. But as a good market, as I've told that, infrastructure and the chemical demand is great. So we don't need to do export from the Indian as of now, in the last quarter. So if this situation will continue, so we take a call of export only based on the realization. So the realization is good in the domestic market compared to the export market. We are not intend to do any export from our unit. So it is purely driven by the realization.
So actually when Mr. Maulik said about the support from the export was that globally demand for the caustic soda is huge. That's where the realization price globally has moved up, and that's where actually it also impacts on the domestic price of caustic soda.
Right. But don't we think, the margin from export could be higher? So are we even planning to expand into export anytime in the future?
So as we do have an infrastructure because we are in the western part of India and we are nearby the ports. So definitely we are able to do it and we can able to do it export if we get a good opportunity and a good price. But as of now, the domestic price is giving us more value. We have not, so it is purely driven by the realization, yeah.
Right. Understood. Okay. So my next question is on, the market size of the three products that we're expanding, that is caustic soda, epichlorohydrin and CPVC resin. So can we know what is the demand, like overall global demand of these products? Any number if you have, ballpark?
So you want me to start from, you want to know the global demand or you wanted to know the domestic demand?
Yeah, domestic, wherein our market.
Major market, yeah. So, Nakshita, the domestic demand for the epichlorohydrin, as Milind has mentioned today, that it is roughly around 85 KTA by end of this financial year, and it is growing on double digit as the epoxy resin manufacturing are increasing their capacity, along with the new manufacturers are also adding for the epoxy resin in India. Because of the infrastructure, the renewable energy like windmill and the automobile sector and the infrastructure sector is growing in India. So the demand of epoxy is growing also in the double digit level. So people are expanding, the existing players are expanding, and the new players are also wanted to expand their epoxy resin manufacturing capacity. So it is growing, but current capacity, as I mentioned, it is 85 KTA and it is growing at double digit. Same CPVC, the chlorinated PVC, current capacity and current demand is around 135 KTA, where only 5% manufacturing capability is there in India. 95% is completely imported, and that is also growing because of the infrastructure is growing and the people are building their houses and the high-end schemes. So mostly the CPVC resin is used in the high-end scheme, and where people are spending for buying a new houses. So most of the builders definitely they are wanted to use more and more CPVC compared to the normal grade of the pipe. So the demand of the CPVC also growing in India is on the double digit side. So definitely it will help in the future. Yeah.
So just a follow-up question on this. As you said, only 5% manufacturing capability is in India. So how much do we plan to capture the market share by putting up this capacity?
Currently we are setting up a CPVC resin plant capacity is around 30,000 tons per annum. So once we stabilize this plant, and probably we may expand further as Indian demand will grow in the future.
Okay. And also on how much are we planning to the marginal increase in revenue by additional caustic soda capacity? How much can we expect?
So you mean to say the additional revenue from the additional capacity of caustic soda?
Yes.
So that would be around, Sanjay sir, if you can.
Yeah. Actually, we are increasing our capacity from 294,000 metric ton per annum to 400,000 metric ton. That is an incremental of 106,000 in annual basis. And roughly we expected to, with the current scenario and current market scenario, we expected to have a 400 sort of crore in a top line from this additional capacity of caustic.
Additional 400 crores.
Yeah. In looking to the present scenario.
Correct. Okay, understood. All right. That was it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may enter star and 1 to ask a question. The next question is from the line of Amit Karawat with Global Financial Services. Please go ahead.
Sir, am I audible?
Yes.
Yeah. So first of all, congratulations on good set of numbers. Sir, I have just 2 questions on industry side. Sir, I want to know the nature of our chloroalkali industry. Is it capital intensive in nature, like cement, steel, and like that?
Yeah.
Yes.
Means it's highly capital intensive in nature.
It depends on how you wanted to make your model of caustic soda. If you wanted to do it captive power plant to take advantage of high EBITDA margin, definitely there is a capital intensive and there is an entry barrier also.
Okay. Means I want to know that if we are doing a huge expansion from last 2 years, and in up to coming 1 or 2 years, we are doing a huge expansion. Can we expect a free cash flow after financial year 23 or 24?
Yes, because the expansion which is going on, as we announced that it's going to be commissioned by early Q1 of next financial year. Yeah. And after that, company has announced the project of chlorotoluene, which we are going to be do with the internal approach only, and that may take a period of over a period of 2 years, because it's going to be commissioned by FY24. So we expect a positive cash flow, free cash flow in the coming years once all these existing projects going to commission and they start going to contribute to the top line as well as the bottom line.
It could be earlier than FY24 also, looking to the high profitability, the way it's going. So yes, free cash flows, in spite of that small expansion, it could come from much earlier than FY24 itself.
Yeah. As we commission all 3 projects and the cash flow will start generating from that 3 projects, definitely we will have a high surplus cash flow compared to what we are planning to do expansion. Yeah.
I'm asking in 5-7 year perspective.
So in 5-7 years, as we had discussed, once the CPVC and the ECH is commissioned, our internal cash flow will be strong enough for all the capex down the line. But provided there might be a big opportunities down the line, so if required, then we might go for it, and we might go for a debt for that also.
Okay. Thank you, sir. My second question is like that. Can we name any 2-3 global players like what we are doing, the value-added product, integrated products like us? Any global player 2-3 and their EBITDA margin compared to us?
Yeah. See, you can consider this. We have a complete integrated complex. As I mentioned, we have a chloroalkali with captive power plant.
Yeah.
And now we wanted to de-risk ourselves from the one particular industry, so we are adding a value-added product like chloromethane, hydrogen peroxide we have done in last financial year. And now we are focusing on the epichlorohydrin, chlorinated CPVC along with the caustic soda expansion. So ultimately down the line we have a goal to consume maximum everything by captively, like chlorine which is generating from the caustic soda, hydrogen which is generating from the caustic soda plant, to captively used and added in a value added product completely added in our own integrated complex. So you can say that the company like Olin, in US, it is a very big organization. I think we are looking for that kind of integrated structure, and we are focusing on making our company in a completely integrated structure so we can get a maximum value addition and we can generate and we can maintain our high EBITDA margin.
Can you spell the name? Olin?
Olin. OLIN.
OLIN. Okay, sir. And we can expect the same EBITDA margin like them?
See, this industries every region has a different way of working. So definitely the profitability is not comparable to the segment and the region wise. Yes. But you can further study and you can go in detail and you can make out your own judgment. Yeah.
Okay. Thank you, sir. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, due to time constraint, please limit your questions to 2 per participant. The next question is from the line of Ravi with RG Capital. Please go ahead.
Hello.
Yes.
Yeah, Ravi. Congratulations, Mr. Malik, to you and the team for a fantastic set of results. So I was listening to the questions by earlier participants, and I think the guidance that you mentioned for FY23 was close to around 2,000 crores, right?
Yes.
So if I take the EBITDA margin...
If the current environment, the situation will continue in terms of the raw material and the finished goods demand, yeah.
Right. So even if I take your FY22 revenues, and if I extrapolate them for FY23, in conservatively speaking, you're going to earn an EBITDA of around 400 crores in FY23, right? So if I just look at it from a longer term perspective, in FY22 and 23, you have a 800 crore cumulative EBITDA. You have also taken, I think, debt of probably 400 crores. So just wanted to know, what are your future capital allocation plans so as to increase the growth of Meghmani Finechem? We are aware of chlorotoluene expansion, but beyond that, is there any discussion that is ongoing in terms of the capital allocation plans? Thank you.
Yes, Ravi, I think it is a good question. 3 years down before we have made out a strategy to reach how we can cross the 2,000 crore. So we have already made a plan how we can grow further from here but we will announce probably by end of Q1 once we commission all 3 projects.
Understood. And my second question was that what is the timeline for the R&D center commissioning, and what is the, let's say, the the researcher pool strength that you're targeting that will be working in the R&D center?
So yeah, it's a good question. We are targeting. So we have procured. We are going to procure a land in Changodar, and definitely, and it will take time, probably 9 to 12 months, to build up a good R&D center. And we are expecting after 3 years, we are planning to add, because first phase of chlorotoluene we have already procured a technology, and we are going to use the same technology and directly utilize to setting up a plant. But down the line of chlorotoluene derivatives, what we wanted to add further value-added products from what we have announced, definitely that will come from our in-house R&D center after 3 years. So that is a long-term approach we have taken, and that's why we are building this R&D.
Understood. Thank you. And
the pool of resources, what you have mentioned, we are going to start with 50 people approximately, and probably gradually as and when we will require, and we will increase the strength.
Understood. One suggestion probably, maybe as and when the R&D center is commissioned and we are working on it, maybe we can also in our investor presentation also give a brief about the chemistries that we are working on, the kind of reactions and the talent pool that we have in the R&D center.
It is too early right now, but definitely we will disclose the chemistry which we are working probably down the line once we are ready with R&D center. Yeah.
Thank you. No further questions. Thank you.
Thank you. Thank you, Ravi.
Thank you. The next question is from the line of Pratik Mehta, an individual investor. Please go ahead.
Yeah. Good afternoon, sir. I just one question from my side. Post expansion of ECH and CPVC, what could be revenue contribution from them, respectively, say on 100% capacity utilization?
Thank you, Pratik. Yeah, thank you, Pratik. Once we commission the plant and once we get to have full year operation with the optimal capacity, sizable capacity utilization of the plant, we expect to have around about 1,200 crores of revenue from these 2 projects, ECH and CPVC.
Sir, can you give the breakup of that, like 600 from both sides?
No, it's not like that, but 1,200, you can consider 1,200 totality from these 2 projects, because this is first in India.
Okay, sir. And what can be the margin profile for them? Is it better than our derivatives products like chloromethane and hydrogen peroxide?
I think Milan has already answered your question in previous Q&A. But Milan, you would like to add?
Pratik, we are actually not giving product-to-product bifurcation in terms of our EBITDA margins. But as a company put together, one can expect around 28% plus minus 2%. But the important thing over here is that as this the asset turnover ratio from this product that we are getting into, that is ECH and CPVC and further chlorotoluene, is much higher than compared to what we are into right now. So that's where the absolute EBITDA will increase, and that will boost our ROC. So that is going to be the scenario down the line.
Okay, got it. That's it from my side. All the best.
Thank you.
Thank you. The next question is from the line of Nirav Jimudia with Anvil Research. Please go ahead.
Yeah, so thanks for the opportunity again. So 2 questions. So one with regard to the previous participant where you mentioned that we are benchmarking ourselves to Olin. So since Olin is predominantly also in the production of epoxy resin, so are we also considering the same thing, that we also wanted to diversify ourselves to to epoxy resin, because only one thing is missing in our chain, that is probably epoxy. We have everything else with us. So is that thought process in the pipeline?
Nirav, I think it's a good question, but as a company of chloroalkali and value-added products, we would like to stick to a product where there is a chlorine molecule is attached to it. Yeah. So, after chlorine molecule is attached in epichlorohydrin, we don't even want to remove again and going into the epoxy resin as of now. So we are very clear, we wanted to attach ourselves where the chlorine will be consumed, not the chlorine will be removed completely.
Absolutely.
And ultimately, our long-term goal is to consume chlorine captively by pipeline customers or within the complex itself. So we do not want to transport after 3-4 years any chlorine from our outside, from our campus. From our campus, yeah. That is the long-term vision we have, yeah.
But sir, for our epoxy, probably that will take care of our caustic production internally, So isn't it a value addition to us where our caustic would be consumed captively?
Nirav, there are a lot of chemistry where it requires a lot of ins and outs, lot of details, lot of R&Ds. So where the people are having a focus on the epoxy business, we are considering them as our partner, and we want them to grow along with us. If they are growing, then we would like to expand further on the ECH side, but definitely we would not like to have any plan to go in the downstream for the epoxy resin.
Got it, sir. Got it. And sir, my second question is on chloromethane. So I think currently, if we see India, it's fairly balanced in terms of demand and supply. But in next 1 year, probably 2 big capacities are coming on. So your take on the same and how it could impact the domestic market?
Nirav, I think it's a good question. As definitely you see that the growth in India in terms of the pharmaceutical companies are growing. Definitely as a solvent, MDC is also growing very fast.
Correct.
There are shift on the refrigerant gases, and there is a high demand because of the infrastructure is growing, because of the housing sector is growing. The refrigerant gases demand is also increasing in India. So you may go in detail further, and you can notice that people are expanding their capacity of chloromethane not to sell as a chloromethane but to consume
refrigerants.
So down the line, I believe in the short term definitely there will be excess or something, but in the long run we would like to see that this chloromethane demand will continue to grow, and even the existing capacity or the future capacity which we are adding right now, which will be easily absorbed by Indian consumption along with the infrastructure.
Got it, sir. That's it, sir. All the best, and thanks again for answering the questions in detail.
Thank you, Nirav. Thanks.
Thank you. The next question from the line of Rohit Nagraj with MK Global. Please go ahead.
Yeah, good evening and thanks for the opportunity. Congrats on a very good set of numbers, and given that the projects are progressing well. So the first question is on, again, epichlorohydrin. If I'm not wrong, you mentioned somewhere that about currently for this financial year, we are expecting something like 80,000 tons of demand. But as I see from the Commerce Ministry data, for the first 8 months, the total import volume is close to about 45,000. So is there, my understanding is right, or is there something which I'm missing? Thank you.
I think you must be missing couple of ports data. So there is we will say that in the end of this financial year, the demand will reach to around 80 KTA. So I think 45 KTA is not a correct number what you have. I think you must be missing couple of port data from your side, yeah. Just relook at it, and if you need, I think we can also help you to find out the exact data, if you need it.
Sure. That will be helpful. Yeah, that will be helpful. So, and the second question is again on epichlorohydrin. Now, if when Meghmani as well as DCM, when they come out with their capacities, will be more than the demand which is expected. So, do you expect that within a period of, say, couple of years after commissioning the capacity, the entire import market will be substituted, or there'll be, probably some import market will still remain, and the capacities for the domestic players in the initial period will be utilized at lower extent, and maybe over a period of 4 to 5 years, those can be utilized optimally? Thank you.
Rohit, I think even though we are meeting the requirement, domestic manufacturing meeting the requirement of the domestic customers, still, the trade happens in India, depends on the export also. So definitely some part of the quantity people might export in the future. It will not be completely 100%. If the demand supply is matching, then people will sell 100% domestically. Some people will continue to buy as a second supplier, and some people will be continuing manufactures in India, continue to export as well. So this is going to be the trend in the future. But as of now, you can say that I don't think so. From the demand side, there will be any issue, because the way the shortage is happening right now in the world for the ECH, I don't see any problem in terms of even though the additional capacity will come in India.
Right, sir. Got it. Thanks a lot and best of luck.
Thank you. The last question is from the line of Deep Shah, an individual investor. Please go ahead.
Good evening. Congratulations on the great set of numbers, and good to see that the capex is on schedule. I had two questions. One was on the debt side. So overall, all the return metrics, be that ROE, ROC, etc., are pretty healthy. Maybe there is only one thing, which is the debt is slightly on the higher side, on 895 crores of long-term debt, and most of it, more than 50%, maturing after 4 years. Is there a plan of retiring the debt a little early? And what does the debt profile or debt to equity or debt to EBITDA look like, or are we planning at the end of FY23 or FY24? This is the first question. And the second question is on the product split. So as of now, 72% of revenue comes from chlor-alkali and 28% from derivatives. As management has already highlighted that we are into de-risking the model and moving towards increasing the pie of derivatives and reducing the pie of chlor-alkali and moving to in-house consumption of chlorine, then what does the contribution of derivatives look like, again from an FY23 and again FY24 perspective?
Deep, I think it's a good question. But first of all, just let me know that currently the about to end the capex cycle is about to end. What we have announced 2 years back, so that will be finished by end of first quarter, and we will start generating the revenue, and the profitability cash flow will be also generating from all the projects which we have planned or going to commission in next 5 to 6 months. So once we started generating the cash flow, definitely we will decide the future strategy, how we wanted to utilize it for the future growth or repayment of the debt. As of now, we have not decided. And the second question, what you have asked, we are working on so many molecules right now, because India is short of a lot of chemicals and they are depend on the complete import. But once we are commissioning all 3 projects, we will probably announce for next 3 years how we wanted to grow our company.
Yeah, just a follow-up question on the second part. So I do understand that there are a lot of molecules that we are working on right now, but most of them will not be value accretive in FY23 or FY24, apart from the 4 already mentioned, which is ECH, hydrogen peroxide, CM, chloromethane, and one more, CPVC. So in FY23, what is the value contribution from derivatives that we are expecting? Because any new project that we'll commission will not be value accretive in FY23.
Just to answer about your question about the revenue breakup from the derivative, especially chemical vis-a-vis chlor-alkali, we expect to have contribution more than 50% from the value-added derivative and especially chemical once we commission the plant of ECH, CPVC, and S22 and CM has already been commissioned. If we talk about the FY23, as we look into previous scenario, it may be around the ratio of 40 from the derivative especially and 60 from the chlor-alkali plant.
Okay, that helps. Thank you. Thank you once again, and all the very best.
Thank you.
Thank you. As there are no further questions, I would like to hand the conference over to Mr. Kaushal Sopakar for closing comments.
Good evening, everyone. I just want to tell you that MFL is very well suited for numerous end-user segments. Our roadmap for near-term as well as long-term appear promising as we incorporate new downstream and value-added product offering, while also strengthening our existing platform of resources. Once again, thank you, ladies and gentlemen, for joining us today. If you have any question, you can reach to our IR team. Thank you everyone for your participation. Have a great evening ahead. Stay safe, stay well, and happy Republic Day in advance. Thank you.
Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.